JB here. Hope everyone's doing outstanding. Thursday, February 27th, 8:56 on this fine morning. Talk quick about the market, some names I'm looking at, go from there. Happy post NVIDIA earnings day. NVIDIA after the close, it was actually, I thought it was a great report. Uh, Sometimes you worry about sell the news and the fact the stock kind of like held its ground. And I mean, we'll see what happens here this morning and after the bell. But it's easy if you're a bull. It's a great report, right? But maybe a little more you want on the guidance side. And then if you're a bear, it's like easy to poke the holes, right? I mean, their margins used to be 79% or whatever. Now they're down into the 70s. Their growth is slowing, but a lot of that's just a function of their dominance and their growth. So, at some point, it's like all these great companies, they're growing 25, 30% at a clip, then it's 20%. It's the year over year comps get harder and harder. Um, so, we'll see what happens. And then you look at the average margins on some of the semi sector as a whole, it's like 50%. So, for them to still command that high margin, they also, Jensen kind of alleviate concerns around DeepSeek. He's like, wow, they're great. It's great for everybody. And then, just the outlook side, right? People are concerned about the CapEx spend. That's the big part of it. I think this quarter with all the names, the magnificent seven names, well, Microsoft, um, Amazon, all these names announcing infrastructure spend. eh, I think it's like a 20% above expectations in regard to how much that dollar amount is, and it'll continue, right, until the buck stops. Like all this CapEx spend, at some point, if you're one of these companies, you got to hope there's some ROI on this, right? If you're not getting a return on your investment, eventually you got to stop spending, right? Or when does that loop go, right? How good of chips do they need? Things like that. So rants for other days. But I think that's net bullish, and maybe the market can find some footing here today. I keep mentioning strategy, excuse me, and crypto. That's another area I'm watching. Just some concern there. And then just a little while ago, you had the POTUS out, and it was out yesterday afternoon too. That March 4th is the tariff date, right? The tariffs that were held off for a month going to go into effect on Canada and Mexico, 10% on China, reciprocal tariff talk with the UK. So I mean, it's all out there. So we'll see what happens. The futures dipped while the SPY was trading over 598. It's back here, 595 and change. I put on a watch list this morning. Just want to see that 594 handle hold. That's where we closed yesterday. That was the low on Tuesday. So just actually, I think it was Monday. Yeah, Monday was the lowest 594. So just want to see that hold. If we do start breaking 594, I'll probably look for some hedge puts. It's funny, you hear all these folks, especially as the market sells off, oh, recession, economy's slowing down, and things like that. And then a great slide here in Market Watch, if you didn't read the watch list yet, just shows the last 10% corrections since 1964. And then it gives the scenarios that were at play when those happened. And like 60% of the time, it's higher yields, right? Rates rising. Like another 30%, it's because of jobs, right? We have a job recession, and then global concerns, right? So whether it be some kind of debt crisis or things like that. So you never hear them. There's no recession or correction starting with yields going down, and here we are. I mean, you take a look. Well, I didn't even pull up yields this morning, but actually, I think they were up this morning a little bit. Yeah, they're up slightly, but I mean, just take a look at this fall. Just a free fall, and now we're starting to look to get to the start of December lows. I think that just all bodes well, or at least provides a backdrop if markets find some footing. I mean, it won't matter if yields continue to fall if the market can't find footing, and this becomes one of those bigger greed reset situations, and then obviously then we can start worrying about a correction. But for now, kind of helps keep things in context and perspective because it's very easy to get feared, uh, into thinking that we're with a big crash is coming. And then last one, I always talk about small caps. Some signs here. Maybe you found a bottom here on the IWM at 215. So we'll be watching that here today. And that's that. All right. So individual names, and I talked about Lemonade after the close. Well, during the rant yesterday afternoon, was turning around 28 or so. I thought it was a great, or I wouldn't say a monster report, but a great report. Like considering where the stock has come and where it's fallen from, the headwinds or the possible concerns around the California fires, what impact to have on their business. The earnings alleviate the concerns around the California fires, and it still shows that they're on the trajectory of huge growth. And I mean, the Bears were all set to take advantage. They pushed it down to 27 at the open, and then it's like they couldn't hold the losses, and then it started to turn around 20. It looked like it was ready to go. I went and got those March strikes. It broke 29 all the way up to 32 almost. I locked some of them for a little over 100% to cover costs, and then I held the rest. It chopped around that 31.50 handle for the rest of the day. Closed at 31.48. If it goes over 32 today and holds that in the morning, I might look to get some more strikes because I think this might be the start of the, I wouldn't call it squeeze 2.0, but maybe the next move to the upside. So really like lemonade here. And then sweet cream was the other trade yesterday. I didn't want to be in a spot. I'm not the most familiar with it. It's the first time I've traded it. So I got an opportunity to lock the calls I got in for flat. I could have got out a little higher, but I was waiting. The plan was to get premium build, hold some into earnings. Didn't get that chance. Thankfully, able to get out flat. And then their earnings were okay. It's like a high multiple name. So the stock's getting destroyed it's down over 10%. It was down over 15%. It was more than that or in the after hours session yesterday. Probably not a name I'm going to revisit, at least short term. So thankful to be out of those. And then also after the close yesterday was TDOC. And, I put it on the watch list too, and I was putting in the chat room yesterday afternoon. It's like someone was trying to induce selling even before the report came out because it went from $10.99 down to $10 at 404. And then the release came out, the actual filing, the SEC filing and the earnings came out and hit the tape at 405. So anyway, always some shenanigans, especially on the divisive high short name. The thing is, the earnings weren't so bad. It's just their first quarter revenue guidance was slightly lower than expectations, despite the full year guidance they gave being in line or possibly even above, depending on the bracketing if they hit the top end of their guidance. So here it is under $10. It's a lot of energy to waste on a name that seems to fluctuate much more. It's just not worth it right now to probably trade this one. So already had some nice trades on the upside, especially when the Citron came out with his little tweets. I locked the March 15s, most of those in for some nice profits. Unfortunately, I did get those March 20s, so I'll just be holding those in the last of my March 15s, and I'll probably take it off the watch list for now, unless something changes. If there's a big bounce and reversal here, I can't rule that out, but just kind of disappointing. So I'd rather waste my time, energy, and efforts on different names. All right, then some of the put hedges here. So first, JP Morgan, which is actually pulling here flat in the pre-market, still holding those spec puts. Already locked a lot of those in for some freebie and some profits. I always be hedging, right? Especially when the market's kind of volatile. So flat yesterday, the 50-day moving average there is 255. I'm not sure if that happens here today if we do get weakness, but I'll continue to hold those. And then Visa. Visa was actually slightly in the red yesterday. I was mentioned on the rant yesterday afternoon. It looks like a big move is coming. Look how tight it's been over the last month and a week, month and 2 weeks. At some point, it's a tug of war, and someone's going to win. I'm biased to the downside. I don't want to be in a spot where I miss the pull. So if it doesn't happen today and tomorrow, maybe it's next week. So don't be surprised if I get some more put hedges on Visa. And, it's a dual purpose, right? Because some of these names, and we saw with DEC and Intuit, sold off regardless the market was going higher. And also those put hedges, not only can they provide protection for downside, but the stock could move down anyway. So that's kind of what I'm playing for in Visa. So I think that's my bias, right? And then also to help protect from downside because it'll probably go down in lockstep with the market if that happens. After the close today, we have Redfin. So, yields are falling. I would have thought this would have broken out. It's been chopping around pretty much the entire year so far in 2025 between low sevens and, it broke over 9 a week and a half ago. I don't think it needs much for it to break out. Its last 4 earnings reports, it's traded to the downside. And then the fifth earnings report 5 quarters ago, it traded up like 25%. So hopefully we get that. If you're someone who likes to flip a coin, we flipped on tails 4 times. So hopefully we get heads today. I think any positive commentary, and I think it trades over $10. And then rallies, I have the March strikes. I'll continue to hold those, and then maybe I'll revisit tomorrow morning with some more positions. Redfin, TripAdvisor, kind of flat here. Closed down 0.4%, so barely did nothing yesterday, but a good sign here. Maybe it's a sign of a bottom, and it'll start to reverse. Some other names to watch in Arista Networks. I wish I got the calls yesterday, but it could have some continuation here today, especially with NVIDIA kind of like putting the kibosh or the squash or the squishing out any of those rumors that CapEx spending is going away in the AI space. I mean, you already had those rumblings, right? It was already Microsoft's cutting a lease deal and, all these other things, that rumblings that have happened since the DeepSeek fiasco. If you take a look at Arista had great earnings as well, and the stock was over 130 before DeepSeek, and then the day of DeepSeek, all the way under $100, it bounced, and now here it is. It was under 90 post earnings, started to bounce here back over to 200-day moving average yesterday. Could be a nice spec play. So we'll see if the market finds some footing here today. I might look for some calls into tomorrow for 105 or so, or maybe even to next week. That's Arista Networks. And then the other two names, United Rentals and, actually, Dell reports after the close today, 10% implied move. If you look over its last 4 or 5 quarters, it's reported some volatile swings. So I would not be surprised to see another volatile swing here today after the close. Just the premiums are pricey. So last quarter, Dell closed down 12%. The quarter before was up 4%. The quarter before that down 17%. And then the quarter before that, which is this quarter last year, it closed up 31%. And ironically enough, the stock, it was 116 on that day. And here we are. Dell closed at 115.55 yesterday. So maybe some deja vu. I mean, a 20% move here would be nice, but then you look at the calls and it's kind of pricey, right? So if, I'm bullish Dell, but it's been a struggle, especially since I started playing calls last year. I mean, the 130s are $1.11 by $1.35. So, 20%, is that going to get you a 5 bagger if it's a 15, 17% move? So I'll probably just, unless the premiums start coming out, I'll probably wait till earnings and then possibly trade tomorrow. And then United Rentals and Caterpillar, they actually pretty much have similar charts. Both have bottomed the last 2 days, slightly in the green. United Rentals barely up 1%. Could be some nice bounce plays especially if the market finds footing today and tomorrow. And also, don't forget, historically speaking, right, the January and February of 2025 so far, bullish days Tuesday, Wednesday, Thursday, bearish days Monday, Friday. So if history is a guide here, tomorrow might not be the best of days, but maybe we can reverse that trend. All right, folks, let's have a great day. I'll be back. Rock and roll.